Hey guys, here are my thoughts on the stock market as a whole. And of course, everyone has their own viewpoints, right? Their own opinion and how they see the world. But this is me personally, what I see. I'm a realist, and I know stocks have rallied hard, especially the big cap names, right? Since technically October 2022, okay? Anytime the market shoots up huge, it's due for a big pullback at some point. We did see a correction over 10%, and obviously that dip got bought out. I do believe we're still in the early innings of the AI boom. If you want to call it middle innings, that's fine too, okay? Either way, I believe there's more companies that are going to benefit from this boom, okay? So we know it all started with NVIDIA, right? We saw SMCI, Broadcom, right? Meta, Google, Amazon, right? These companies went up by a lot, guys. Microsoft, I mean, not as much, okay? But we're talking a lot of these over 100% gains, okay? Since last year or early last year. Now that was the first wave of this AI boom, and I believe the small cap AI stocks will have their day next, okay? But you have to be patient. It doesn't always happen when you want it to, right? But with CPI coming in lighter than expected, this is a good time on the dip to dollar cost average into my four favorites. Like I said, they have the strongest conviction in the small cap sector. Again, high risk, high reward, but our Upstart, because they're AI of lending, then Xometry because they're the AI of manufacturing, and then also Lemonade because they're the AI of insurance, and then UiPath because they use AI to or robotic process automation to get rid of those easy back office mundane tasks like paperwork, right? That you don't have to pay a worker now to do that because you can use AI software to do that. So I believe every company can benefit from that, and UiPath has a strong presence in Europe, and they look likely to cut interest rates before the US. So I believe that stock is going to catch a bit eventually and go on another nice rally. Again, with how far off this stock is from its highs, I'm not saying it's going to go back to its highs, but all these companies that I just mentioned here are way off their highs, and they have room to go up at least 50 to 100%. And like I said, it's up to you if you want to take your initial house money that you started with out when you're up 50%, or wait 75% up, or 100%, however you want to do it, okay? But I do believe these stocks will have their time eventually as we get closer to an interest rate cut, okay? So I wanted to wait till the CPI data came in light to recommend them, and since it finally did, it's time to go into these stocks and just hold till the end of the year at least, guys, okay, to see what's possible. So don't worry about the day-to-day. I would get away from your account. Don't look at it, because these are volatile stocks. I mean, they move around quickly, especially Upstart, guys. Remember, if you can't handle the volatility, right? If you can't handle the heat, stay out of the kitchen, as they say. This one went to $20 to $30 in like 3 days, and then pulled back to 25 in a couple days. So that's what's possible when there's high short interest in a stock. But it can pay off handsomely if this company proves what they're set out to do, and I believe they will, because they've shown it before the pandemic happened, what's possible with this company. I believe they'll get back to profitability, and they already are planning on that for the second half of this year, right? Adjusted positive EBITDA. So that's a good sign for Upstart. They got one more quarter to clear of weaker revenue, but then after that, I believe the stock's going to go on a run. And it could even start going up now because the market's 6 to 9 months forward looking. So I believe the 20s is going to be a good price for Upstart, but this is a high risk stock, guys. There's a lot of analysts, a lot of short interest on this. So if you do get that nice rip, there's nothing wrong with playing with house money, guys, okay? If you get a 50%, like I said, 75, 100, however you want to play it, all right? So that's my views on Upstart. And then the reason I like Xometry is because they keep adding buyers and suppliers, and they're speeding up the supply chain with their instant quoting with AI. So they connect the manufacturer to the third party who builds those customized product or whatever the manufacturer needs. So that just makes sense with us bringing the supply chain away from China and back to the US, that this makes sense, and they've already proven, you know, they're helping out the supply chain with that. So instant quoting versus having it take days, right? And this allows the supply chain to be sped up, okay? So that's huge. That's why I like Xometry, and that's pretty much at all-time lows. So you can get these stocks really low, guys. And then Lemonade, I like. They had a great earnings report, and they're still losing money, and that's why investors, some want to stay away from it. But they have a nice path, guys, to being free cash flow positive and getting to positive EBITDA, okay? So, and that's another one I like because insurance, the AI of insurance, and they have the younger generation too, you know, Gen Z and the millennials that are growing with this company. Okay, they keep increasing their user base. They have homeowners, you know, renters insurance. They have pet insurance. You know, they have a wide variety of stuff, and so I like this company to grow. So that's a little breakdown of each of these stocks, why I like it. And again, they've been out of favor, and most people are like, I can't believe you're recommending these. You know, these stocks are doing nothing. They're going down, right? You got to see the big picture and know that if there's ever a time to take a chance with these, it's now, because of CPI coming in lighter with inflation. Remember, that's the biggest thing. When inflation goes down, obviously the odds of a rate cut go up, and that helps these interest rate sensitive small cap stocks. And we're talking about the AI sector, which is in the beginning, like I said, early to middle stages of this AI boom. And so I believe they will benefit eventually, guys. So while I do believe some of these stocks are overextended out there, they've gone on huge runs, I'd look for more of the value that haven't gone on a run yet. And that's why, you know, I like the Russell 2000 index, guys. Tom Lee believes this is going to go up 50% still this year. Even if it goes up half of that, okay, that's going to be insane gains for these stocks. So now's the time to play it. Hold till the end of the year. See what happens, guys. I think you'll like your portfolios by the end of the year.